Good morning to all once again, and I hope we had a beautiful and wonderful weekend. Please, if you can hear me, let me know in the chat box, please, so I can be sure I'm communicating. So if you can hear me, please let me know. Yeah, good. So yeah. All right. So last week we had a wonderful topic to we treated a wonderful topic, and it's it was a good one, but the bad side of it is our recording had little glitch, and it was not really uploading, so I had to redo another. So we will have to take what we did last week again with it for the benefit of those that didn't attend and the unavailability of the video. If I was able to process the video, we would have commenced to having. I was supposed to have our speaker today, then David Homoloyi. David Higem, the young guy. We were supposed to have him today, but very soon now you become a master at it. Then you can start hosting classes. In short, at that point, I think I will have to rest. So then you can always take charge and tutor everybody in the room. Well, pending that, we are waiting for that day to come, and hopefully, I am very sure it will with consistency. Hopefully, I believe. Alright, so we have what we call important chart patterns. So when we talk of important chart patterns, we talk of structures. Market does not just move on its own accord. No, market doesn't move just on its own accord. Market is being influenced by so many factors, one of which we discussed during the fundamental aspects of the class. When I mean fundamental aspect, when we're talking about the fundamental influence that influences the market from moving both up and down. So whatever must be influencing the market to move can influence the market to move in structure. And just like we have the fundamental effect and the technical effect, which is fundamental effects can override the technical analysis at a particular point in time for a particular duration. That after the whole fundamental influence has been made effected, then price will start moving technically again. So when we talk about fundamental, like I said in our last classes, I said fundamental has to do with anything that influences the market outside the chart, which has to do with policies, economic policies, government policies, social policies, and the likes of them. So these are influences, these are things that influences the market to move. So that is basically news and events that we regard as fundamental. And when we talk of technical, we are beginning to say we are coming to the chart to see the possibility of what market will do. I don't know if Omoloye is seeing this. You chatted me up this morning and I gave you an analysis. Can you see what Euro USD is doing now? It actually got to my order point. It has picked the first order and now it is dropping. So can you see that now? I don't know if you are seeing this, Mr. Yeah, you should be seeing this. So you have to be very, very attentive whenever you are making your analysis, because it is very, very important you are attentive, like you are attentive to detail. You're attentive to detailing every single thing you see. because you don't want to make mistake to eventually start paying back to the market just because you did not see some things. And you know the funniest thing is probably when you are in loss, you begin to see, I didn't see this earlier. I didn't see this earlier. So it's as important for you to see before you take action. This is even the, I think this is the market, yeah. Can you see? So I had two pending orders. I had one, yeah, and I had one, yeah. So this is a 1 hour order block. The other one here, the other price here was infused as a result of my refined order block, but price went right in and picked the first order, and now we are running. And take profit is just down. Take profit is down here. And why did I put my take profit here? That is because if you go to my trading view, I spotted a fair value gap here. And when we come back to the trading view here, you will see the same fair value gap here. So there's possibility that price will jump into this zone and what? Fly up. Do we get it? The only reason the market retested here is because it broke this low. So price retested to respect this next sell zone, which is the supply. So once price supplies to this point, then there's possibility that, okay, let me just drop my expectation. Now price has done this. It has broken the low. Now it has retested back to the other block zone. Now I expect it to come here, then fly. Then I expect price to make the move from here, or irrespective, price is most likely price will just come do this, then go back to the main demand zone, which is the order block. Then price can then fly from here. But the whole main frame is just that as it is now presently, price must jump into this zone. So when price jumps into this zone, as a retail trader, it is my own, like in due diligence, I am to just take this trade. I'm to just take my trade and leave, close my trade and leave. Then the remaining thing I will not do is observe the market. Because if I'm staying because I want price to jump into this other block zone, I am not really helping myself. Because one, I'm trying to reach my profits to the market again. So once price jump into this fair value gap, courtesy demand that it must respect it first. And once it respects it, it reduces my profit, the amount of profit I've made from here to this point, and there's higher possibility that a fair value gap has the power to pull price and begin to buy again. You get it? It has the ability to buy. And you know, one of the best way you can know a valid order block is that there must be a fair value gap before a valid order block. If you are not seeing a fair value gap before an order block, there's higher chances that the order block might not be able to hold price. But when you see a fair value gap before an order block, there's probability that the fair value gap might or might not do the job. When I mean do the job, price might jump into it, because normally it is only an order block that price can jump into and then begin to go back. After prices reverses to the order block, it begins to go back to the normal trend. But when price jumps into some fair value gap, they can just move from there without even coming back to the order block. It is rare, but then in that case, the only way you can keep safe is to do what? Once price jump into a fair value gap, what do we do? In the chat box, please let me know, what do we do? You can unmute yourself if you are not in another environment. Once price jumps into a fair value gap, by tomorrow we'll start going into ICT. So I'm very sure we'll start getting used and conversant with all these things and all this word I'm saying. So when price jump into a fair value gap, there's higher probability that higher chances that price will reverse and start buying. So in that case, I will just, once price jump into here, I don't want to know. Once it taps it, I move out. So if price now the remaining thing I will now get myself involved in is what? Monitor price, just watch price do its thing. Then when price comes back to this other block, then I will take another new buy. Why? Because I'm having a demand zone here. So once price is demanding, I buy in, then you run it to the extreme top here. So one of which is the reason why when he sent me the analysis, I told him He was sending me, I think, double top or so. So I told him, yeah, you need to see things very well before you go into the market. So market took out this low. It won't just take it out for fun. There must be an influence. There must be an effect. So whenever market breaks a low, market will test back to the order block zone, then push price down back, and yet we still have fair value gap. Remember I said fair value gap, order blocks, breaker blocks. These terms are like depth. When market is moving, market will not move, market will not keep moving and leave so many depths behind, which means price will need to come and fill up all this fair value gap order block before it begins to what move to its own way, which implies that if market moves without filling them, then probably news must have been a fundamental influence that has pushed the market from going far without filling those gaps. But sooner or later, price will have to come back to come and fill them up. So that's just a branch by to just explain um, what I mean by structure and patterns. So very quickly, today we'll be considering different circle of trade structure and patterns. So number one, we have the symmetrical triangle. Now, what do we regard to as patterns? There are some patterns, there are some structure that when market does it, you should have an endpoint evaluation on what the market will do. So let's quickly Alright, so we have what we call number one, the symmetrical triangle. When I mean trade patterns, what do I mean? I mean whenever market makes a particular structure. Remember, like I said, markets do not just move versus its own. As long as we are trading two currencies in a pair, it implies that there must be a level of strength in one currency and a level of weakness in another currency. So when one currency is strong, the other has the ability to what? To weaken it. So for example, we are trading Euro USD